Everything in this video is not intended as financial or investment advice and is for educational purposes only. I'm Josh Olszewicz, the head of research at Valkyrie, and let's take a look at the midweek market update. Had some news last night that previous CEO of FTX, Sam Bankman-Fried, was arrested in the Bahamas after the U.S. filed criminal charges. Certainly an outcome that many were wondering what took so long, but it did in effect happen, and I wish him a fair and speedy trial and a resolution for all of his victims. He was also denied bail, judge citing flight risk, which I think most of us can agree on there. We also had some interesting news regarding a CPI. Never a dull moment here with SBF trying to front run CPI. CPI printing 7.1 year over year. Still significantly elevated, as you can see here, relative to really the entire 90s period, 2000s, the aughts, as they say, the 80s. So as much as people, speculators, really are celebrating this decline, we still have a ways to go, and that's likely what Powell is going to come out and say tomorrow during the FOMC meeting. So we're certainly headed in the right direction, as they say. And if we look at the breakdown, I wish we had this graph every single time there was a CPI print of all the components and the changes year over year, month over month, what have you, so that you can easily read this. Eggs at the top at 50% year over year. I'll get to that in a second. Semi-surprising if you are unaware of the avian flu issues that are going on right now. Headline number here at 7.1. Some baked goods still elevated. Butter, milk, other food items, lettuce. I don't know if you've tried to buy lettuce lately, but you're definitely feeling this 20% year over year. Inflation. Smartphones and TVs down significantly, likely as supply chain issues are alleviated. Used car market down significantly. So again, we're headed in the right direction. Still some problematic areas, airfare, transportation, some food items, but we're getting there. And in regards to avian flu outbreak, according to the CDC as of last month, they reported a record number of avian flu outbreaks in poultry, wild birds. This is going to affect the entire supply chain, as they typically have to cull the entire flock or farm in order to halt this sort of outbreak. So I think that's what we're seeing in that egg inflation number. Certainly partially this is having an effect. And if we look at inflation generally, I've really flipped to this more and more over the past couple of weeks. This is trueflation. It's a measure of millions of items in the US that are reported to Chainlink daily, and they spit out a number. They aggregate all this data on an oracle, and it gives us a number, and that way we can track this in a real-time way, not the silly way of manually going places and writing down numbers, which is how I think they calculate inflation now. So between the two, we have some very good ideas as far as where this is going. It does match roughly, 7.1 November makes sense. Still declining. It looks like the December print will likely be down year over year as well. And if you want to investigate further, you can break down all the components here and see the inflation trends. But this whole idea was sort of put together through a hackathon, which is just put a bunch of people in a room and give them a set amount of time to get some goal done. And here we are almost a year later since this thing was established. And it really has been quite on the money most of the time with where CPI has been, is going, ideally will go. So even at 6, we aren't quite to that terminal rate of 5, which is where the Fed may go. And I guess the question is, if the Fed reaches 5 and inflation is essentially flat and doesn't decline significantly, then what, right? So hopefully that's some forward guidance that Powell can provide tomorrow, as I'm recording this the day before FOMC. This is from Nick Timiraos at the Wall Street Journal. The consensus is now that 0.5 percentage point hike is expected. And it's really more about the destination than the journey at this point, as we're trying to figure out, okay, like I said, if the ceiling is 5, great. What happens if we get to 5 and inflation's still at 6, right? Or inflation is still above the 2% target? Will they raise the inflation target, which historically has been around 2%, from 2 to 3? Will they hike till we get to 2? That'll be a long discussion for 2023. On the crypto side of things, we have some interesting conundrums, I guess, as we continue to deal with the FTX implosion, centralized exchange custody issues. Binance, which is the largest exchange by far in both trading volume and assets in their custody, has seen some major outflows over the past day, over the past week, relative to total assets. You don't really get a great picture of this. This is Glassnode, and you're looking at wallets that Binance has told us are theirs, and wallets that have been investigated by other people that have said, okay, yes, this makes sense. This is their wallet. There are other ways to do this through proof of reserves. I prefer the open source intelligence route over this is what we have, take our word for it type thing, because you can see the money moving on chain. But in any effect, most of this, 47% or so, is about Binance USD, which is their stablecoin. You can see the changes past 24 hour there. BTC at around 7 billion, ETH at around 6.2 billion. But they've gone from nearly 50 billion to under 40 billion now in reserves. And really the question isn't, do we trust what the reserves tell us? The question is, do the liabilities and assets match up, right? We don't really know the Binance side of things. Is every dollar a dollar somewhere on one of these chains, right? So what we're seeing now is a distrust of any custodian in general. Binance is the largest. It makes sense that they're having the biggest outflows. I don't know if anything's going on there. I don't have any insider information, but I think it's fair to be cautious regarding any custodian at this point. In regards to stablecoin circulating supply, that does show up a little bit on the BUSD side of things in the blue here. You can sort of view this as stablecoin circulating supplies as trust in the stablecoin. If you see stablecoin circulating supplies rising, typically that means risk on. That means people trust that coin. And recently, BUSD has had a decline in circulating supply slightly, not by much. Circle as well declined slightly. Tether declined slightly. Obviously, the biggest decline in Tether over the past year was after the Terra Luna collapse. It's kind of this hot potato of contagion where people all of a sudden don't trust Tether, so they go into USDC, and then they find out that USDC is following OFAC compliance, so then they shift from USDC to USDT, and now perhaps Binance is having issues, so BUSD is going to have some declines in issuance, very likely. And on the exchange balance, just generally side of things for Bitcoin in the green, ETH in the pink here, we're just continuing to see a drop off in digital assets held on any exchange, period. So that's not necessarily a bad thing, just in general. Now, not everybody can self-custody, certainly, but those who can are doing so in this very interesting moment in our history here. And we are seeing an uptick in on-chain activity slightly. This is Bitcoin here now. Active addresses in the green, transactions in the orange. And we have just this baseline activity here that's down slightly year over year, but flat on the year, I'd say. And week over week, month over month, slightly up. So we are seeing on-chain activity pick up a little bit there. Hash rate sort of flat. It did want to decline there. The problem with hash rate declining in a large way, as it did when Chinese miners left China for elsewhere. They left China suddenly, and then slowly these rigs, these physical hardware devices, got plugged in somewhere else, or new hardware devices arrived in new locations. And so you saw hash rate increasing. Now we still have new devices arriving in new locations, to a lesser degree probably than we did in combination with the Chinese miner exodus in 21, 22. But now we also have the more efficient miners scooping up the less efficient miners' hardware and plugging it in their network using their electricity services. So to expect a continued broad decline of hash rate may be unjustified if those miners are essentially just swapping hands here with some duration in between. So hash rate still looks fairly healthy. Moving on to ETH here. ETH, general downtrend year over year, quarter over quarter, I guess you'd say, in transactions, active addresses. Still very close to previous all-time highs in 2018. Again, the difference here is we have DeFi now. We didn't have DeFi in 2018 to the degree we have now. So there's still plenty to do with Ethereum other than buy it, speculate on it, sell it, right? Now you can sort of live on DeFi, live in DEXs. This is ETH's moment, if ever, right? Decentralized exchanges exist, DeFi exists, and there was mass fear, rightfully so, regarding any centralized custodian. So over time, that fear probably will die down as investors trust custodians again. But currently, we are seeing some uptick in even ETH's on-chain activity here on a week-over-week, month-over-month basis. So still plenty of activity going on there. And as far as ETH supply is concerned, post proof of stake transition, issuance on the year, well, let's say on average, since the transition is around 0, right? It's not inflationary, it's not deflationary, it's around 0. And again, to simulate the difference between ETH proof of work in the white and ETH proof of stake in the green, in the blue, and then Bitcoin here in the orange, definitely a change in where issuance was and is. One other quick breakdown for Ethereum as far as the types of activity. This is really interesting. This is a sort of research project by Glassnode, and they looked at the types of addresses interacting with all these transactions on Ethereum over time, and they sort of broke it down into DeFi, NFTs, ERC20, stablecoins, and you can kind of see how NFTs took over mid-2021 sort of to present, and how before that it was all mostly vanilla activity or ERC20, which is another way to say smart contract interactions on the Ethereum operating system, I guess you could say. So we're seeing less of that and more as a percentage NFT related transactions here. Some technicals here to round us out. DXY continues to decline, which is excellent if you are bullish on crypto or bullish on Bitcoin specifically, because historically we've done best on the BTC USD pair when DXY is declining. From a technical perspective, should we return to the previous range of say 88 to 105 and continue a descent back to 90 thereabouts, then certainly it would be fair to expect some positive reaction on the BTC side of things based on the two previous occurrences of a similar pattern like this. And the closer we get to having, Bitcoin's having, right now it's all about ETH and ETH's issuance, because ETH's issuance declined significantly. But now we're going to start talking about Bitcoin's issuance declining by half in early 2024. So we're starting to see this narrative solidify where if we're talking about rates and we're thinking, okay, when are rates going to start declining towards the end of 2023 into 2024, ideally, right? We don't know what exactly is going to happen there, but we have rates declining. We have DXY declining into 2024, potentially, right? And we have Bitcoin's issuance declining by 50%. So the fundamental picture, along with the technical picture on the macro side, is starting to shape up quite nicely. We're still obviously a year away, but when the tightening becomes less restrictive and we maybe entered easing, then I'd certainly expect Bitcoin to do well in that situation. Moving on to Bitcoin's technicals here, we're still below things we should be below if we are bearish. I mean, there's no way to slice that, in a more positive tone. We have broken out of the previous very aggressive downward trend here in this channel pitchfork. We're still below the daily cloud, which is another trend metric, just like we were above the daily in 2020, 2021. The same rationale applies here. We are bearish until we are back above that at the very least. We've also got the 200 week to deal with, the 200 day EMA to deal with. There's plenty of overhead resistance, as we say in the technical analysis community, to deal with until we are leaning more bullish again on price. I think it's fair to say we are approaching neutral, but we are still very much bearish on trend in the near term. But we are definitely less bearish than we had been in the previous months based on technicals here. But I would love for price to be back above 25 again, get this 200 cross for the first time ever. This is the first bearish cross we've ever had. So these are definitely things many people are watching. Something else many people are maybe watching inadvertently or feeling is Bitcoin's outperformance or underperformance relative to the S&P. For many people, asset managers, allocators, their benchmark is the S&P. So if you don't outperform the S&P, you are not being efficient in your allocations, right? So this is a Bitcoin versus SPX chart, and we will get more attention from TradFi when we turn a corner here on outperformance against the S&P, along with this is a monthly average. And if we start to break above that monthly average, if we start to show positive momentum again relative to the S&P, then as they say, liquidity begets liquidity, and we may see inflows once again from the TradFi side of things, at least in the short term. ETH sort of zoomed in here again, looking at this accumulation profile, very similar to really the textbook Why Coffee and Accumulation of 2015 Bitcoin. Now there are all sorts of labels and things that I'm leaving off this on purpose, but we are currently what looks to be in the latter stages of a potential push back to, again, overhead resistance somewhere around 1800 in ETH's case. Using similar metrics to Bitcoin on ETH here for the daily, again, still we're below what we need to be below in order to be bullish, right? We're definitely bearish here. Below the 200 week, below the 200 day, below the cloud. We're slowly but surely getting there. And again, this looks more neutral to me than even Bitcoin does. Less and less bearish by the week, but would love for us to be back above ultimately 1500, 1550, the 200-day moving average, to be confident that we'd have a chance at near-term bullishness once again. Lastly, I'll just mention the ETH-BTC chart. Again, lots of narratives around all of this regarding issuance on a relative basis between ETH and BTC. And on a technical basis, the setup here is a 600-day range that really we've never seen ETH-BTC at previously. Previously, it's always looked either double top, triple top, inverted cup and handle. There's plenty of technical reasons why. Shooting star, right? You can take your pick on all this really ugly technical reversal setups that arguably just aren't here at this level currently. So if things go well for ETH, just measuring this out, 0.11, 0.12 on the ratio is certainly possible. Revisiting these previous like shooting star wicks, candle bodies, certainly within the cards. Again, relative to that March 2024 Bitcoin halving date. Something else to pay attention to here is the ETH unlock for the staking, whether that's March, whether that's September, whenever that is. Every other day, it seems like it's a different date that they're deciding on. But we're looking at sometime next year, very likely. That's all for this one. This video is for information purposes only, and the opinions expressed are not financial or investment advice. All opinions are my own and do not reflect the opinions of Valkyrie Investments and its affiliates. No fiduciary obligation or duty exists or is created between you and Valkyrie Investments or its affiliates, including me, by virtue of any opinions expressed in this video.